What's up, everyone? Hunter here. So, Bitcoin and the cryptos just had a flash crash yesterday, and I wanted to see what everybody else was saying about the matter. So, let's take a look at some of these clips.
Crash. Who did it? Was it whales? Was it CME gap? Was it a leverage adjustment? It was a leverage adjustment, and this one points exactly to that. And the same stuff you pointed to CTO as well. When you see all that leverage, I've been talking about the over $5 billion in futures contracts exploding because institutions want to get exposure to Bitcoin, there's going to be a correction. It's very, very normal. But remember the perspective of how small this was. Yes, nearly between half a billion and $1 billion was wiped out of leverage longs. But those corrections are healthy and they're required to flush that leverage long positions and bring the Bitcoin funding rates back to normal. That's just how markets work. So it's important for the viewers here to understand the mechanics of markets behind the scenes and the huge exposure that was in futures. Of course, when things get out of whack, they need to be brought back in line. After the rampage that Bitcoin has been on, it takes a correction. This is from a guy called Van Straten, and everybody expects regular 10% pullbacks, sometimes even 20% pullbacks during bull markets. These are called bull market corrections. And again, 10% is a norm. Sometimes 20% can happen.
All right, so these guys are saying it's pretty normal, and I would agree with that. I do think that these flash crashes and adjustments are pretty normal to crypto and Bitcoin. Now let's see if they have any price targets of how low this could go, or if there is a recovery or anything like that.
Exactly, and that's where it bounced back now. So of course it seems like magic lines, but often these levels kind of work because people remember prices, and for now it has bounced back and is still holding above that. If it drops further, if we get any price action, something like this, I would draw your attention to the volume here, that we had a lot of volumes below here. I'm not predicting this will happen. I'm just saying in case we wake up tomorrow and it's sitting here, I would think that this would be very strong support somewhere around here. But for now, we're holding about.
So he's saying about the 38,000 level is pretty strong support due to those volumes, due to the amount of people trading at that price range. Now let's take a look at what Gareth and Ben have to say.
When you say cool off, I mean, in terms of price retrace, like, are you talking like a couple more thousand, or are we maybe back to like the mid 30s or the low 30s? I mean, do you have a sense of that, or?
I mean, no. Look. I think it's always possible we could go back into the 30s, and if we get a hard landing, we could go lower than that. I mean, it really depends on how bad things get. I would say if you look at the 100-week moving average, this is. I don't know if we've talked about this before, but the 100-week moving average is now at around 28K, but it is starting to curl back up, right? It's going to start to curl back up here. The reason why I'm looking at that is not because it has to go there, but if you look at every prior cycle, and I don't know if you remember when we talked about the 20-week SMA and how like Bitcoin always falls below the 20-week SMA in Q3 of the pre-halving year, right? Like it did it right here. It did it over here, right? It did it in the cycle before that, and so on and so forth. But another interesting thing is that we've always seen it go to the 100-week moving average, oftentimes in the early part of the halving year, right? So like right here, like this was December 2019 and January of 2020, it had that pullback to the 100-week moving average in Q1 of the halving year. If you go to the cycle before that, you'll see that, we had this pullback to the 100-week moving average in Q1 of the halving year as well. And if you go back before that, right here, we're sort of below it of the 100-week moving average. And that was basically right now, right? Like December of the pre-halving year. So it does seem to be, and by the way, we also fell below the 20-week SMA at the same time, right? At Q3 of the pre-halving year. So I do wonder if that pattern is going to repeat. And look, I mean, even if it does repeat, which again, there's no guarantee. The market is every single cycle it is slightly different, right? And I think that's fairly obvious. But even if it does go to that level, you still have to be on alert. Like, do you get a soft landing, like this scenario where there was like a recession scare in the United States, but it didn't actually materialize, right? Like it was just a scare. Or do you get something like this where we get a bounce and then we get a hard landing? You know, and I think that's what we get to figure out in 2024.
All right, so you can tell these guys have a more bearish tone. They definitely think that could go lower than the 38, maybe to the 30s, maybe touch this moving average over here, which is around the 30s, the high 20s. And they do point out that in previous cycles that has occurred, and that even though this year could be different, this cycle could be different, that pattern could repeat. I don't think anyone is really sure right now, because he was pointing out that they touch on Q1 of the halving year, which is, January, February, March. But if the ETF for the Bitcoin is supposed to be approved in Q1, then it could change a lot of things. It could make it pretty different. If it's one of those buy the rumor, sell the news events, then this could very well play out. In Q1, we could go down, and then after the halving, we could go back up. Or we could have one of those fake outs, and it could just keep going up, maybe come down a little bit, maybe skim right above that moving average. We'll have to see. Okay, we'll have to see. Now, they do say that it's still possible for it to go up to the 48,000 level. We'll have to see about that as well. If this 40,000 level that we're currently in holds as support, then we could do another leg up to that 48,000 level. But people are a little more cautious of that because we have run up and we have extended so far.
Including myself, I thought by worst case, like November, December, we'd know if we were in a recession this year, and that obviously hasn't happened. But you got to figure at some point next year, it's either, okay, no, there's no recession at all, and now it's put to bed, or we do slip into that recession. And then you got the halving with Bitcoin, obviously the spot ETF we're waiting on. How does price ultimately, deal with that? And I'm still in the camp that, this rise in Bitcoin is probably largely, at least a good chunk of it is due to the hope about the spot ETF. And then obviously halving comes after that. But
so yeah, everybody's a little weary going into next year. Will there be a recession? Will there not be? Will the Fed cut rates early? Will they cut rates late? I think there's just too many variables to have a good grasp. So, but be aware that these crashes and these adjustments are very normal. Don't freak out, because even if you do have one of these flash crashes, I mean, this was COVID right here, right? So even if that happens, which means we have a hard landing, you can see the price will bounce up very quickly. Not to say that this will happen next year if we do have a hard landing, but if we do have a hard landing, the Fed will start cutting rates, and then the theory is that this will still play out. So again, none of this is financial advice. I'm just watching these guys and trying to analyze what they're saying and making my own decisions on the matter as well.